Do you think holding Tesla shares in its current standing in the market is wise? Today, Tesla stock is still below $200. Because of that, some investors are scrambling to sell off their shares. Others, on the other hand, advise against selling Tesla stock despite its current price. Don't miss this info. Like any other financial venture, investing in Tesla stock comes with certain risks. But while there are risks, there are also meaningful rewards. Get an extra $10 cash. Open an account and deposit any amount on MooMoo. It's a limited bonus for celebrating MooMoo's 10th anniversary. Check the link below. MooMoo is a great platform to trade stocks with many unique, easy-to-use tools. I think a lot of you will find it really helpful, especially if you want to be more hands-on with your investments. For example, find out the right time to buy and sell stocks. Link in the description below. There are several advantages to investing in Tesla stock. For one, the stock trades unrestrained by fundamentals, unconstrained by the news, and instead moves purely with the sentiment. This means that the level-headed investor or trader can take advantage of the crowd. Also, Tesla's brand advantage and penchant for viral marketing mean that the underlying fundamentals of the company remain strong. Although that may arguably change in the future, Tesla remains the one to beat in the EV industry for now, and EVs remain the segment with the most consumer pull and government push. Of course, there are also a couple of disadvantages to buying Tesla stock. First is the valuation. Another is the seemingly endless controversy that Elon Musk makes that inadvertently affects the company's stock price. There is also rising competition from legendary automakers like Ford and VW, among others. Having said that, some investors are still keen on holding their Tesla stock, while others are clamping to sell them off. During the company's annual shareholders meeting in early August, Tesla CEO Elon Musk said, "Tesla's strongest competitive advantage may be manufacturing efficiency." However, he also said one of Tesla's greatest long-term opportunities may lie in robotics powered by artificial intelligence. Looking ahead, Musk says Tesla could achieve a production run rate of 2 million vehicles by the end of this year, and he reiterated the goal of 20 million vehicles by the end of the decade. Like earlier mentioned, Tesla is a pricey stock in terms of valuation, but the company has delivered huge earnings and revenue growth for several quarters in a row. Also, annual earnings estimates show the company's growth trajectory is still very much intact. Tesla's business model is the key to the company's success. Tesla has been one of the most successful public companies of all time, and it disrupted an auto business that no major startups had succeeded in for decades. However, Tesla's stock price had notably dropped to below $200 in the first week of this month. Aside from Tesla dealing with COVID-19 related issues at its most productive facility in Shanghai, other factors are weighing on the stock as well. Experts believe that Musk's purchase of Twitter could impact Tesla in several ways. Tesla's China plant recently was upgraded to produce an annual capacity of about 1.1 million vehicles. Last week, Barron's reported that the facility shipped 71,704 electric vehicles in October, down from the record 83,135 delivered the previous month. China's strict COVID-19 policies, which have resulted in lockdowns throughout the region, have negatively affected productivity. This also impacted consumer demand in China, and it might be partly why Tesla recently lowered prices for Chinese customers. But another factor could be weighing on Tesla shares today, and it doesn't have to do with the business itself. Musk's initial plan to acquire and his actual acquisition of Twitter had been news for months now. Now that Musk has taken Twitter private, the entrepreneur has one more major item on his plate. But that might not be the biggest concern for Tesla investors. Musk used some debt to buy Twitter, and interest payments will need to come from either the business's cash flow or some other source. Several companies have announced a suspension of advertising on Twitter until the new direction of the social media site is more clear. That could mean lower cash flow, and Musk might need to service the debt interest payments from his own funds. The problem for Tesla shareholders is that Musk might have to sell more Tesla stock if he needs to raise short-term cash. That could be what is now impacting Tesla stock. Or it could be other shareholders trying to game that potential. There has been a lot going on at Tesla during the first week of November. Tesla CEO Elon Musk said that he would sell about 10% of his stake in the company based on votes on his Twitter poll asking users of the social media network whether he should sell his shares. About 58% voted yes. Much is made lately of unrealized gains being a means of tax avoidance, so I propose selling 10% of my Tesla stock, Musk said in a tweet, adding he does not take cash, salary, or bonus from anywhere and only has stock. Musk has previously said he would have to exercise a large number of stock options in the next 3 months, which would create a big tax bill. Selling some of his stock could free up funds to pay the taxes. This is one reason why most Tesla shareholders have been against Musk's plan to buy Twitter since the beginning. However, according to Tanaka Capital Management Chief Investment Officer Graham Tanaka, selling that number of shares is a lot, but it's not up to the public or Twitter to tell Elon Musk what to do. Tanaka believes that Elon Musk is on a different track than Bill Gates and still has a lot of creativity and value creation for shareholders ahead of him. We have owned the stock for 7 years and we could hold it for another 7 years. There's that much room ahead of them, says the Tanaka Capital Management executive. This will only be a minor fluctuation in the long term. According to Greg Basuk, chief executive at AXS Investments, they see today's activity as more of a very dramatic and very short-term reaction to Musk's Twitter developments. He believes that there will be some downward pressure on the Tesla stock in anticipation of Musk's selling shares and maybe some others trying to sell shares in advance of that. Interestingly, we think that could create a buying opportunity because nothing has changed with respect to the underlying fundamentals and the outlook on Tesla, says Basuk. We're advising investors that to the extent there is a decline through today, tomorrow that could be a potentially very interesting buying opportunity for those who already were bullish on the growth prospects of the company going forward. An analyst at Hargreaves Lansdowne named Nicholas Hyatt said, "A large share sale always has the potential to disrupt a company's share price, a simple consequence of supply and demand. However, it shouldn't fundamentally alter Tesla's attractions or valuation. And if well handled, the sale shouldn't disrupt the share price over the long term." It is quite evident that most analysts are not perturbed by the recent performance of Tesla stock in the stock market. In fact, David Madden, markets analyst at Equity Capital, believes that there is absolutely no reason to believe that the company is not doing well. A large share sale always has the potential to disrupt a company's share price, a simple consequence of supply and demand, says Nicholas Hyatt, an analyst at Hargreaves Lansdowne. However, he explained that it shouldn't fundamentally alter Tesla's attractions or valuation, and if well handled, the sale shouldn't disrupt the share price over the long term. AJ Bell investment director Russ Mould said that investors may look at the situation and try to sell before Musk does, potentially then buying back at a lower price if they still like the stock. It's also an open invitation for short sellers to place a bet that the shares will fall, generating a profit for them if the stock does decline in price, Russ shared. Moreover, Neil Wilson, chief market analyst at Markets.com, believes that Musk simply wants to sell some stock now because the valuation has rocketed lately and cash out while the going is good. Today, Musk owns roughly 23% of Tesla, and it was viewed by many on the street that he would sell up to 5 to 6% of his ownership stake, with 10% being a higher amount that could surprise some investors. But ultimately, it's a digestible number we are not overly concerned about, says Wedbush securities analyst Dan Ives. We would rather Musk rip the band-aid off now and sell this portion of stock rather than it lingering over the next year and feeding into any non-fundamental bear thesis on the story. Overall, most analysts are not overly concerned about Musk's decisions that are inadvertently affecting Tesla's stock. In fact, most of them appear to understand the logic behind Musk's move. This is enough reason why you shouldn't sell your Tesla stock despite its current price. In fact, experts believe that for those wanting to hold Tesla stock for years, this could be a good chance to start a position at a better price. Make sure to subscribe to this channel for more Tesla stock content.